January 8th, 1920, 3 o'clock, visionaries gather to shape India's economic future. By 11th December 1920, their idea takes form. ASSOCHAM is born. A chamber created to expand Indian industry beyond cotton and jute and build the backbone of a self-reliant nation. As the 1940s arrive, vision becomes blueprint. J.R.D. Tata, G.D. Birla, and India's leading industrialists chart a bold roadmap. The Bombay Plan of 1944, a guide for a modern industrial India. The 1990s open India to the world. Dr. Manmohan Singh reminds the chamber, growth will now be powered not by scarcity, but innovation, confidence and global ambition. At ASSOCHAM's centenary, Shri Narendra Modi reaffirms that spirit, imagining India at 2047 as a nation built on enterprise, resilience and self-reliance. From the Bombay Plan to economic liberalization, from the age of cotton to the age of code, ASSOCHAM has stood on India's 5 digital economy and sustainability and environment. 1 century on, the journey accelerates. From industry to intelligence, from markets to metaverse, India now moves on data, design and deep tech. A future built on AI, clean energy, robotics, quantum innovation and green industry. Legacies of Indian industry leaders have shaped the chamber, honoring the past, inspiring the future. A nation ready for 2047. Smart, scalable, self-reliant. Championing foresight in policy and enterprise. Innovate, advancing progress through technology, research and bold thinking. Impact, creating measurable outcomes that shape economic, social and environmental growth. ASSOCHAM, powering India's leap into the future.
कभी हवाओं में भरती हूँ सितारों की झलक, कभी ढल जाती हूँ सुनहरे अंगारों में। मैं हूँ दिल से तराशी, कुदरत से कारीगरी। मैं हूँ सेनको।
Real power doesn't shout. It empowers. It leads by example. It walks the talk. And let actions speak the truth. Real power shines through you.
Some legacies are precious simply because they uphold the finest of human qualities. Senko is one of them.
If you are honest, you have to manifest your honesty. You have to show your honesty by your behavior, by your thought.
With 85 years of legacy, Senko Gold and Diamonds began its journey in the East Bengal city of Dhaka. When late Sri Moran Chandra Sen started Senko Jewelers with the vision of bringing Bengal's heritage craftsmanship to life in gold. Over the years, he passed it on.
16th Gold Economic Forum. I request everyone present here to kindly settle down as we're about to begin the program in a short while from now. Thank you so much. Good morning, ladies and gentlemen, and a very warm welcome to all the dignitaries joining us at the forum today. I request everyone to kindly settle down. Thank you so much. My name is Harpreet Kaur, and on behalf of ASSOCHAM, I'm your host for the event. I request everyone present here to kindly keep your mobile phones on silent mode so that we don't disturb the speakers. Thank you. We extend a special welcome to the esteemed speakers and delegates who have joined us at the 16th Gold Economic Forum, themed Gold's New Horizon, integrating the bullion market into the $5 trillion Indian economy and global financial order. The forum is organized by ASSOCHAM. ASSOCHAM also extends a sincere gratitude to all the supporting partners. It's a privilege to associate with you all on this platform. Ladies and gentlemen, and now let's start this event with the symbolic lighting of the lamp. I request our chief guest, Shri P.P. Chaudhary, Honorable MP Lok Sabha Chairperson, Joint Parliamentary Committee on One Nation, One Election, Member in Committee on Finance, Estimates, Law and Justice, Home Affairs, and others, and all our dignitaries to kindly come forward for lighting of the lamp. We are expecting our chief guest here shortly, and we appreciate your patience. Thank you so much. We'll be starting this journey in a short while, and we sincerely hope that meaningful deliberations in the forum will help everyone plan better. Thank you. That India's gold market is booming, with the country accounting for 25% of global demand. The gems and jewelry sector contributes 15% to India's exports and employs 5 million people. To tap into this potential, the government has introduced initiatives to boost the industry. Digital gold platforms and financial products like SGBs and ETFs are gaining popularity, especially among young investors. And now, ladies and gentlemen, please join me in welcoming our chief guest, Shri P.P. Chaudhary, Honorable MP Lok Sabha, Chairperson, Joint Parliamentary Committee on One Nation, One Election, Member in Committee on Finance, Estimates, Law and Justice, Home Affairs, and others. Ladies and gentlemen, please join me in welcoming our chief guest, Shri P.P. Chaudhary, Honorable MP Lok Sabha, Chairperson, Joint Parliamentary Committee on One Nation, One Election, Member in Committee on Finance, Estimates, Law and Justice, Home Affairs, and others. We request all our dignitaries and our chief guests to kindly grace the occasion and ignite the flame. Let's start this auspicious journey with the symbolic lighting of the lamp. Ladies and gentlemen, please put your hands together as we begin the program.
शत्रुबुद्धिविनाशाय दीपज्योतिर्नमोऽस्तुते
with this auspicious start, we now move into the inaugural session of the 16th Gold Economic Forum. I request our chief guest, Shri P.P. Chaudhary, Honorable MP Lok Sabha, and our dignitaries to kindly come and join us on the dais. Ladies and gentlemen, please put your hands together for our chief guest and our dignitaries. I request Mr. Anil K. Agrawal, Past President ASSOCHAM, Mr. S.K. Jindal, Mr. Suvankar Sen, Mr. Jitin Makkar, Mr. Sri Ram Krishnan, Mr. Sivanshu Mehta, Mr. S.C. Agarwal to kindly come and grace the dais. Thank you so much. Once again, we warmly welcome you all to the 16th Gold Economic Forum. And before we proceed further, I request everyone present here to kindly stand up for the national anthem.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे.
Thank you so much. We request everyone to kindly take their seats. And now I request Shri Anil K. Agrawal, Past President ASSOCHAM, to kindly felicitate our chief guest, Shri P.P. Chaudhary, Honorable MP Lok Sabha, with a bouquet. Sir, thank you so much for taking out time for us. We really are honored to have you for this gathering. Thank you. Thank you so much. And now, ladies and gentlemen, we're moving into our inaugural session with the welcome address. I request Mr. Anil K. Agrawal, Past President ASSOCHAM, to kindly come forward and deliver the welcome address. Thank you so much.
Good morning. Good morning. A very warm welcome to ASSOCHAM. It is my privilege and honor to warmly welcome our chief guest, Shri P.P. Chaudhary Sahab, Honorable Member of Parliament, Member of the Parliamentary Standing Committee on Finance and many other committees, as you've just heard his introduction. He has been our Minister of Corporate Affairs, and I worked with him very closely then, and it is a pleasure and honor to receive him at ASSOCHAM. He was also a Minister of Law and Justice, and he commands much respect in the government and the political circles. He comes from Rajasthan, and very, very honored, sir, to have you with us at ASSOCHAM today. I also extend a warm welcome to my colleague and my friend, Mr. S.K. Jindal, Chairman of the Gold and Investment Committee of ASSOCHAM, whose consistent leadership has been instrumental in shaping this forum over the years. I also heartily welcome all the distinguished dignitaries on the dais, esteemed speakers, industry leaders, and friends from the media. Friends, ASSOCHAM has played a pivotal role in shaping India's economic landscape through policy advocacy, industry engagement, and thought leadership. As a vital bridge between industry and government, it has consistently contributed to trade promotion, investment facilitation, and sustainable economic development. With a rich legacy of nation building, ASSOCHAM continues to support India in its journey towards becoming a global economic powerhouse. In fact, as you all know, Honorable Prime Minister Shri Narendra Bhai Modi has given a call that India should be a $5 trillion economy by 2030. And gold is something that is very precious, something in everybody's mind. Well, I see not many ladies here, and the gold is the most favorite for all the ladies. So going home, I think when you were coming here and you said that we are going for a gold conference, they would have immediately said, yes, yes, please go ahead and get some gold home. So I hope you will bring some gold, at least some knowledge, so that you can buy gold, invest in gold, and keep gold, remain invested in gold, but not in the tijori or your lockers, but in the manner that it can be created as a national or treated as a national asset. Well, friends, this 16th Gold Economic Forum, this is a journey which began in some times in ASSOCHAM in 2004, and we had Mr. S.K. Jindal as the chairman of this committee then, and we are very happy to have him as the chairman of this committee now. Mr. Jindal, thank you for your leadership. I would also like to acknowledge the consistent leadership at ASSOCHAM from the Secretary General. He's not here, he's busy in another meeting, Mr. Saurabh Sanyal, and his Deputy Secretary General, who is with us, Mr. D.S. Rajora, for putting this conference together. ASSOCHAM has been actively engaged in addressing a wide spectrum of issues relating to gold, including its import duty, export of gold jewelry, domestic distribution, securitization, and efforts to bring gold into the national economy to create productive value. Our endeavor has been to ensure gold contributes more effectively in India's growth story. As we look at the broader economic landscape, India today stands amongst the fastest growing major economies of the world, and we are trying to reach this $5 trillion mark in the coming years. Friends, we are all aware that geopolitical tensions and global uncertainties have significantly impacted commodity markets, particularly energy and precious metals. We have experts from MCX, NCE, BSC, and I'm sure you will get to hear them and know from how exactly the commodity market is behaving in these uncertain times. Over the past year, gold and silver have witnessed notable rise driven by volatility, inflationary pressures, and safe haven demand. And in the coming weeks, we've also seen sharp corrections, highlighting the sensitivity of these markets to global developments. Despite these fluctuations, gold has always remained a credible and trusted asset, and it shall continue to do so in India. Gold is far more than an investment. It is deeply embedded in a culture and social fabric. It is Christian and treasured, especially by Indian women, and it continues to be a preferred form of savings and security. India, therefore, remains one of the largest buyers of gold in the global markets. As we deliberate today on the gold's new horizon, integrating the bullion market into 5 trillion Indian economy, it is important that we align tradition and transformation, enhancing transparency, embracing technology, and ensuring sustainability in the sector. I am confident that the deliberations today will provide meaningful insights, foster constructive dialogue, and help shape a stronger and more resilient gold ecosystem. We look forward to the valuable insights from our distinguished speakers and experts on gold's future, potential in the Indian economy, and most importantly, we are looking forward to hearing our chief guest, Honorable Shri P.P. Chaudhary. Once again, please join me in welcoming our Honorable Chief Guest, Shri P.P. Chaudhary Sahab.
Thank you so much, sir, for delivering the welcome address. And now I request Mr. S.K. Jindal, Chairman, National Council on Commodity Markets and Investments, ASSOCHAM, and Chairman, Jindal Exports and Imports, to kindly come forward and deliver the theme address. Ladies and gentlemen, please put your hands together for Mr. S.K. Jindal.
Thank you very much. Good morning, friends. I join my friend Mr. Anil Agarwal, past President ASSOCHAM, in extending a very warm and cordial welcome to our Chief Guest, Shri P.P. Chaudhary ji, Honorable Member of Parliament and Member Parliament Standing Committee on Finance. We are extremely grateful to you, sir, for accepting our request and being with us this morning. Mr. Anil has always been available for ASSOCHAM, and Mr. P.P. Chaudhary has always been available for people of trade and industry. I have seen from various quarters, whenever we request him, whenever we approach him, he tries not to say no. He always makes himself available, which is not really the case with all of them. And I really appreciate this quality of Mr. P.P. Chaudhary, which I always remember. I also welcome all the speakers, participants, and friends from media to this 16th edition of Gold Economic Forum. 2005, when we started Gold Conference, at that time also, Mr. Anil Agarwal was with me, and we did it together. Gold has always been humanity's hedge against uncertainty. For thousands of years, through wars, recessions, currency collapses, and political upheaval, gold has endured. And that is what is happening today also. These kinds of turbulence are at its peak, what we are seeing today. And this is the reaction of gold, which is showing to all of us that it follows uncertainty. Whenever there is more uncertainty, gold prices will always go up. Whenever there is less, they will come down. And you all will agree that in the near future and further future, we see that uncertainties are going to be part of our life, and gold prices on that point alone, I am saying, is going northwards. This is something temporary, what is happening now, but finally it will have to go up, the kind of atmosphere, geopolitical position we are seeing in the country. In India, gold is not just an asset class. India has a special treatment for gold, which most of other countries may not have, but still, it is a blessing at birth, a gift at marriage, an offering to the divine, and a legacy passed from one generation to the next. It is woven into the very fabric of who we are. And in volatile times like these, understanding it, truly understanding it, matters more than ever. What we have seen over our 70 years, like for me, and for thousands of years for the Indian civilizations, that this is the way gold has always behaved, and it is considered as the most pious metal ever traced, ever discovered. Today, I want to talk to you about three things: the forces driving volatility in the gold market right now, how can we navigate that volatility with practical strategies, and where I believe gold is headed, with a particular eye on what India means for the future of this market. Part 1, understanding the volatility. Gold does not move in vacuum. its prices is shaped by a web of interconnected forces. First is interest rate. Whenever we have seen interest rate going up, gold prices goes down, because then it becomes difficult to hold gold, and the cost of holding gold becomes much more. Whenever gold interest rate goes down, gold prices goes up. It becomes easier to hold the gold, and this is the kind of behavior and relationship they share. Secondly, the currency movement. Currency people are obliged to use it, but they don't have faith in all the currencies, and especially some large currencies, because they are afraid something may happen someday and they will be left with nothing. Recently, there was an example of USSR suffering at the hands of USA when they said, your currency lying with us in dollars, it has been covered under sanctions and we cannot part with it to you. So big amount of money got freezed and they did not pay to Russians to give them pressure to yield to their wishes. Third is geopolitical uncertainty. This is what we are seeing now: conflicts, trade disputes, sanctions, political instability. All of these push investors towards gold as a safe haven. India, sitting at the crossroads of major global trade routes and geopolitical theaters, is acutely sensitive to these shifts. In a world that feels increasingly unpredictable, this driver has never been more relevant. More and more countries are taking their money back and converting this into gold and keeping it with them, because in case of need, they don't have to rely on anybody. And the same thing applies not only to countries, people also. In the villages also, people, they don't want to part with large part. They will part with a small part which they can rely upon to some extent, but they will not part everything to somebody, to some lender or somebody, so that they are not in control of it. Whenever it is needed, if you have gold, you can do your things at peace, and whenever this money or gold or money is lying with somebody else, maybe giving you small income, but then it may not be available at the time of its need. There are strategies for navigating volatility which is required now. One is diversification. Don't put all eggs in one basket. You may go, an individual can go up to, I would say, 10-12% into gold of his total investable surplus, and then he will not be hit hard at any point of time. But suppose he puts 80-90%, then he is heading for a trouble. So diversification is very, very important, and he can keep this gold in the form of sovereign gold bonds, gold ETFs, digital gold platforms he can use, and he can control his risk. Second is hedging tools. It may not be applicable to all, but all those who are working heavily into gold, they can use these tools, because an individual will find it difficult to use these hedging tools. First he must understand, and then he should be able to play with it in a way that he is able to run through it, navigate it in a good way. Third is the time horizon. Don't think in terms of that I will just hedge it for 1 year or few months, something like that, and I'll make a quick money and come out. It is practically not possible. From experiences, it has been seen that if the investment is really for 5 years and over, then you can make money, but not short-term investments. The future of gold, as I look at, I am optimistic on future of gold, as I have seen all these 70 years of my age, which I have spent already. And what I have seen is that India is the world's largest consumer. Still now, 25% of the gold which is produced every year in the country comes to India. India buys it. Second, all the central banks are still buying gold. And when central bank buys gold, this shows that after great study and all, they are doing it. And you can be using that same strategy to some extent within your 10-12% thing, not that you go above board on that. Inflation still remains a concern, and it will continue to remain a concern. It is also an element which moves gold northwards. Safe haven status of gold during last 6,000 years of experience of people, it has not changed. Gold is always considered a safe haven because it has time and again proved to be a safe haven for people, for countries, for the world. Ladies and gentlemen, gold is not simply a commodity, it is a mirror reflecting the anxieties and aspirations of the age we live in. And if you want to understand gold's future, look to India. Look to a nation of 1.4 billion people, for whom gold is not a trade, not a ticker symbol, not a line on a balance sheet, but a promise of security, of prosperity, of continuity across generations. These are the values we have been following up all our age. Volatility will never disappear. Uncertainty will not disappear. But those who understand gold, who respect its history, study its drivers, and invest with discipline and clarity, will be well positioned for whatever the future holds. India's love for gold is not going anywhere, and neither is gold itself. This will continue as ever as we have seen until now. The road ahead is not without its twists, but I believe it leads somewhere very bright indeed. Thank you very much. Friends, I would also like to inform you that ASSOCHAM has created awareness about gold purity. I will request ASSOCHAM team to play a short audio, and before that, I would request all of you to please put your hands together in appreciation of Mr. P.P. Chaudhary's encouragement to all of us by being present himself in this conference. Thank you very much.
खंडेलवाल जी, मेरा हार तैयार हो गया?
जी बिल्कुल एकदम तैयार है बहन जी, ये लीजिए।
अरे वाह, हार तो बहुत खूबसूरत है। एक मिनट रुकिए, क्या आपने इस पर BIS हॉलमार्क का निशान भी लगाया है? क्योंकि बगैर BIS हॉलमार्क के सोने का कोई मोल नहीं है।
बहन जी, हार आप कल ले लीजिएगा। सोने की कोई भी वस्तु खरीदते समय BIS हॉलमार्क जरूर देखें।
जागो ग्राहक जागो।
Well, that was quite an interesting audio. I thank Mr. S.K. Jindal for delivering the address and for setting the theme of 16th Gold Economic Forum. Thank you so much, sir. And now I request Mr. Suvankar Sen, Co-Chairman, National Council on Capital and Commodities Market, ASSOCHAM, and Managing Director and Chief Executive Officer, Senco Gold Limited, to kindly come forward and deliver the industry address. Ladies and gentlemen, please put your hands together for Mr. Suvankar Sen.
Thank you very much, everyone. Good morning to all of you. Thank you for taking time out from your busy schedule to be a part of this esteemed gathering. My gratitude to the respected dignitaries on stage. Shri P.P. Chaudhary, sir, thank you very much for taking time out and guiding us in this golden journey of ours. Mr. Anil Agarwal, Mr. Jindal, Mr. S.C. Agarwal, Mr. Shivanshu Mehta, Mr. Sri Ramakrishnan, Mr. Jitin Makkar, thank you very much for all your inputs that you shall be giving us to us today. It is both a privilege and responsibility to address this forum at a time when gold is undergoing through its most important critical transformation in the history. We've all been seeing the way the gold prices have been on an upward move. In the last 1.5 to 2 years, gold has almost doubled in terms of its value. We can see that it's not only that the households and the consumers that are buying gold, we have new set of buyers in the form of countries, in the form of banks, in the form of various investor communities who are thinking that gold is a very critical asset that they must possess. We have seen that for centuries, gold has been an integral part of the Indian culture, passed through generations that Mr. Jindal was talking about. But today, gold is not just a cultural asset. It has become a strategic financial asset for each and everyone, whether it be in the microeconomic perspective or a macroeconomic perspective. What we are seeing is that gold is moving out from the household locker to the balance sheets. Now, let me set the global context. Now, we are living in terms of heightened uncertainty, as Mr. Jindal was saying, the tensions in geopolitics, the currency volatility, the de-dollarization, these are all taking away the importance of currencies, and people are looking for certain commodities that shall give them that peace of mind and that shall give them more stability, whether it be in the form of gold, silver, or any other such commodity and assets. Central banks across the world are increasing their gold reserves. Every time we can see on the newspapers that how much is the gold reserves of various countries, including the country of our own India, is increasing. Now, in this global change of the global financial order, we know that gold is becoming something which is the pillar of the future. It is not just a relic of the past. And here, as India, we hold a very unique position. We are one of the largest consumers of gold in the world. But the question here is that, shall we continue to be a price taker, or shall we actually be able to show our power and be a price maker as well, and show the world that how gold as an asset can be utilized in a much more smarter manner? And that is what we need to come together as an industry, whether it be the jewelry community, whether it be the exchanges, whether it be the banks, whether it be the policymakers. We just need to come together and formulate a thought process by which we as a country and economy can make the best use of the gold that is lying with us. We know that about 25,000 tons of gold over the past so many years, since the time of our grandparents and maybe before that also, has been accumulating in all our households, in all our savings. But how much of it is being actually utilized is a question that we all need to address. And along with the transformation of the utilization of gold, we know that there is one more transformation which is happening, which is the technology and how technology is being used in the gold industry. I think that we can be very much aware that be it World Gold Council or the various mines, that blockchain and traceability has become a big question. We can see that digital platforms has becoming a unique feature by which the end consumers or even consumers of exchanges who are being able to transact in a much more efficient manner. We are seeing that how the markets are being driven by algorithms and how that is being able to help all of us in all parts of the industry in terms of risk management, trading, and also in terms of mining. But alongside this opportunity is also the responsibility. The responsibility is that in this whole ecosystem, physical and digital, how do we make sure that both of that grows together? And in this transformation, the question is that will India as a country be a leader or will it be a follower? But I am quite sure that if we can put all our minds and brains together and utilize the platform as we have it today to come up with policies and thinking and share our ideas and the challenges that we are facing, I'm sure that as a consumer of gold and as a country, we can become a leader in terms of the usage of gold. And we need to build systems and processes that we can unlock this value that we are sitting upon. Today, we are aware that there is, gold loans. We can see that how MSMEs are utilizing gold in terms of taking further loans. Individuals are utilizing gold in taking loans. But are we being able to utilize the full capacity that we have? And today, in our whole journey, we know that our Honorable Prime Minister, Shri Narendra Modi ji, is thinking of taking India to a $5 trillion economy. And today, in this Gold Summit, we need to keep in mind that how we come together with a solution and have gold as an integral part of the society and the financial market to take us to that $5 trillion economy. So for industry, in terms of all the various stakeholders, we need to ensure that we embrace technology, we build in transparency in all our systems and processes, and the trust within ourselves and with the consumers. So let us conclude by saying that gold has always been India's past, but today gold is also India's opportunity, and tomorrow gold will be India's strength. We know that even in the jewelry sector, from my personal experience that we are seeing in the last 1 or 2 years, consumers are buying jewelry, not only utilizing money, but almost 45 to 50% of the transactions that they are doing is utilizing gold. So gold is as much an important currency as much as any other currency. And I think that together, let us take a promise and make a promise to each other that we will try to take forward the golden journey of India with the help of gold. Thank you very much.
Thank you so much, sir, for delivering the industry address. And now, ladies and gentlemen, it's time to launch our knowledge report, jointly prepared by ASSOCHAM and ICRA Limited. I request our chief guest, Shri P.P. Chaudhary ji, and our esteemed speakers to kindly do the honors and launch the same. Please put your hands together for this wonderful launch of our knowledge report. Thank you so much, sir, for launching this knowledge report, which is jointly prepared by ASSOCHAM and ICRA Limited. It has got really important content, and I'm sure it will serve the purpose and benefit the readers. Thank you. Thank you so much. Thank you. And now, I request our chief guest, Shri P.P. Chaudhary ji, Honorable MP Lok Sabha, Chairperson Joint Parliamentary Committee on One Nation, One Election, Member in Committee on Finance, Estimates, Law and Justice, Home Affairs, and others, to kindly come forward and deliver the inaugural address. Ladies and gentlemen, please put your hands together for our chief guest.
Sri Anil K. Agarwal ji, past President, ASSOCHAM, Sri S.K. Jindal, Chairman, National Council on Commodity Markets and Investment, ASSOCHAM, and Chairman, Jindal Exports and Imports, Sri Suvankar Sen, Co-Chairman, National Council on Capital and Commodity Market, ASSOCHAM, and Managing Director and Chief Executive Officer, Senco Gold Limited, Sri Jitin Makkar, Senior Vice President and Group Head, Corporate Ratings, ICRA Limited, Sri Ram Krishnan, Chief Business Development Officer, NSE Limited, Sri Sivanshu Mehta, SVP and Head, Bullion Multi-Commodity Exchange of India Limited, MCX, Sri S.C. Agarwal, Member Managing Committee, ASSOCHAM and CMD, SMC Group, panel speakers, dignitaries and friends sitting in front of me. I extend my compliments to ASSOCHAM for organizing the 60th Gold Conference. gold occupies a unique and enduring place in India's social, cultural, and economic fabrics, symbolizing prosperity, security, and tradition for generations. India is among the world's largest consumer of gold, accounting for nearly a quarter of gold demands and annual import of around 750 tons. It is estimated that Indian households hold over 24,000 tons of gold. However, a significant portion of this wealth remains locked in physical form, limiting its contribution to productive economic activity. So this is very, very important aspect. When I was discussing with Anil Agarwalji, he was of the view that government should come out with a concrete policy that how the gold, basically this creating a non-productive asset, we can bring it out and it can create a productive assets. So definitely it can add in our economy. In this context, ASSOCHAM's initiative to bring together policymakers, industry leaders, and financial experts to deliberate on the role of the gold in the economy is both timely and commendable. The theme of this Gold Forum is to integrate the bullion market into India's journey towards a USD 5 trillion economy is strategically important. As India continues its rapid economic growth, it becomes imperative to channel idle assets such as gold into formal financial system. While gold serves as a reliable store of value for household, its limited participation in the financial system constrains its potential to support investment and capital formation. As we progress towards the goal of developed India by 2047, unlocking this latent economic value is essential. The gold has no doubt immense potential, and how it can be monetized, because you are expert and you know much better how policy can be framed. So how it can contribute in the national assets, how it can be made bankable, and how it can rotate in the economy by way of giving loan by the banks, and all activities can pursue later on. The financialization of gold offers a practical pathway forward. Government has taken initiatives over the years and has introduced instruments such as gold ETFs and sovereign gold bonds, providing efficient alternatives to physical gold. Encouragingly, there is a gradual shift in consumer behavior, particularly among younger and middle-class investors, towards these financial products. At the macroeconomic level, greater financialization of gold can help reduce dependence on imports and ease pressures on the current account deficit, thereby enhancing economic resilience. Simultaneously, the gems and jewelry sector remains a key pillar of economy, contributing about 15% to the merchandise exports and providing employment to nearly 5 million people. With India's strong craftsmanship, skilled workforce, and supportive policy environment, the sector is well positioned for sustained growth. Financial institutions, including banks and NBFCs, will play a crucial role in transition by expanding gold-linked financial products, improving access to credit, and integrating gold more effectively into mainstream financial services. Gold will always remain integral to India's heritage. However, its future lies in its transformation into a dynamic financial asset that contributes meaningfully to economic growth. By shifting from physical holdings to financial instruments, we can unlock substantial value, support investment, and strengthen the economy in our journey towards a Viksit Bharat. I am confident that the deliberation at this forum will generate valuable insights and actionable recommendations. I once again congratulate ASSOCHAM for organizing this important forum and wish all the participants a productive and insightful engagement. Thank you very much.
Thank you so much, sir, for delivering the inaugural address. We thank you for your time and for contributing to the inaugural session of 16th Gold Economic Forum. And now I request Mr. Jitin Makkar, Senior Vice President and Group Head, Corporate Ratings, ICRA Limited, to kindly come forward and deliver the address. Ladies and gentlemen, please put your hands together for Mr. Jitin Makkar.
Hello, good morning, everybody. I represent ICRA Limited, and we've worked on the report that was just unveiled on the gold sector. Now, ICRA is a rating agency, and we rate a large number of entities across sectors, and we rate a large number of stakeholders within the gold value chain. So we would be rating jewelers, we would rate refining companies, manufacturers, wholesalers. So across the value chain is something that we have a perspective on, and we've tried to bring that perspective in this report. So this report has some good data, some good insights, and I'll encourage you to go through it and see if you draw anything from it, and if possible, pass along some feedback. You've heard the dignitaries who've spoken about the value that gold holds in the mind share of India, particularly. And I'm reminded of the book by Gabriel Garcia Marquez, the Colombian author who was born in the early 20th century. And he's a man who had something about the way he would put out his prose in the written word. And he wrote a book called 100 Years of Solitude. And the way that story worked in the beginning was that there was a village in which gypsies used to come every year in the month of March, and they used to bring different things like magnets, telescopes, some fragments of forgotten science, magnifying glasses and whatnot. And the purpose that those gypsies brought those wares to that village was not really to sell those wares. It was primarily to make sure that people in that village were able to use those wares, look at those wares, and understand that how their viewpoint about life could be altered, and how a magnet could be looked at in a different light versus a telescope and whatnot. And the reason I'm mentioning this is that on a similar vein, we see that gold also means different things to different people. Somebody says gold is an asset, or it's a commodity, it's a currency, or it's a collectible. And it could also be put to various uses. Some people use it for trading, some for investment, some as a hedge, some for price signals and macroeconomic tea leaves, and some purely just as an embellishment or an ornament. Now, we rate a large number of jewelry companies, and some of the trends that we see are driven by what's really happened on the pricing front in the past couple of years. We know that gold prices have had a very strong rally in the past couple of years. They rose by almost 30% in FY25, another 50% in FY26. Prior to this recent days, the way it has, the rally has lost its legs in some way. But again, what it has done is that volumes have not really declined. Jewelry demand has not really declined to the extent that price has risen, with the result that jewelers in India have been able to still report double-digit revenue growth. What we see is that jewelers have expanded their number of stores. Roughly 20% of store count additions have happened in the past couple of years, FY25 also, FY26 also. And one thing that stands out is that jewelers are not just growing by opening up company-owned, company-operated stores, but they're also going the franchisee route. So again, to economize on capital. And it's not just the jewelry ecosystem that has benefited from this. We also see gold loans. The exposure on gold loans has gone up from around 1 lakh crore till a couple of years ago to now as high as 4 lakh crore. Now that's a quantum jump. So again, the gold price rally has led to a lot of boats rising with that tide. Even if jewelry demand in volumetric terms has gone down, it has not gone down in terms of the demand for bars and coins. It has not gone down in terms of the money shifting towards ETFs. So again, financialization is the term that we heard a short while ago, and financialization is certainly a trend that's happening globally, and it's happening in India as well. Now, the reason why gold has this special place and not some other commodity or some other endowment like oil, for example, or land, for example, gold has that special place because gold does not corrode, it does not get subject to changes in its chemistry because of chemical reactions. It is able to withstand the geological entropy. It is able to not be subject to, say, a bank failing or a sovereign failing or technology failing. And finally, it has built that network effect that over the last several centuries or as time goes back in time, gold has been able to command the respect of the masses. And therefore, gold has that unique position that it has been able to retain its special position as a storehouse of value. Now, when we look at the rating trends in India, a lot of upgrades have happened in the past couple of years, as I was mentioning. And one of the reasons for that is that gold as a market has also seen a lot of regulatory developments. So regulatory developments can sometimes scuttle growth, but on other occasions, it is a great scaffolding for growth to climb. And this is what happened in the Indian market because of the regulatory developments. Hallmarking is something that we already know about. The Indian good delivery standards have again created that trust factor on the bullion manufactured in India. Again, that has supported the demand for Indian bullion from the Indian jeweler community so that the dependence on imports to some extent can be brought down. So again, pricing is one layer. The other layer is trust, and gold as a commodity has that special characteristic of being able to hold on to trust. And now when we talk about financialization, what we're trying to do is that on that layer of gold as a foundation, we are trying to build another layer of trust from, say, the exchanges, whether it is the stock exchanges, the BSE, the NSE, or the bullion exchanges, IIBX, or the derivative exchanges, for example, the MCX. What we're trying to do as a country or as a globe is that the physical value can also be realized more optimally by these additional layers of trust, and there could be this velocity of physical gold enhancing, and therefore the GDP growth enhancing, therefore the value capture also happening in a way that benefits a given country. So this is perhaps one of the key reasons why we have assembled here, to understand how that value could be best captured. So in that respect, I will just put a pause to my words and hope we have the opportunities to listen to the rest of the discussions during the day. Thank you for hearing.
Thank you so much, sir, for delivering the address. And now I request Mr. Sri Ramkrishnan, Chief Business Development Officer, NSE Limited, to kindly come forward and deliver the address. Ladies and gentlemen, please put your hands together for Mr. Sri Ramkrishnan.
Honorable Minister Shri P.P. Chaudhary, distinguished dignitaries on the dais, industry colleagues, friends from ASSOCHAM, thank you first of all for this opportunity to present our views. I just want to take you back by 30 years, let's say to 1995, and present the picture that existed then. So the GDP of India in 1995 was about $400 billion. The GDP of the whole of Europe put together was about $7.3 trillion. And the GDP of the US was $7.6 trillion. Fast forward by 30 years, the GDP of India is $4.2 trillion. We have grown by more than 10 times. The GDP of Europe is $22 trillion. They've grown by about 3 times. And the GDP of the US is about $32 trillion. They've grown by about a little more than 4.5 times. So a lot of people, are wondering, how did India manage to grow so fast? It's okay to say that your base was small, etc., but I don't buy that theory. Honestly, 10 times growth is not going to happen just like that. Obviously, there are some reasons for why it happened. Some people will say that it was the IT boom which predominantly led this transformation. Fair enough. Some people will say that it's the demographic dividend. The mix of population in India is such that we have a very young population and therefore the productivity is very high and we are seeing massive growth because of that. Fair enough. Some people will say that the government has taken very, very progressive measures, particularly in the last 10 years, and the policies have been so good that the stability and the mindset has ensured that India has grown very, very fast. No doubt about that. But also, I think there's one important thing we did in the early 90s, and that was we fixed the capital markets. Today, India has such a strong capital markets ecosystem. And if you see what happened, we set up NSE back in the early 90s. And when NSE went live, first of all, we did a few things differently. Like, for example, we abolished the trading ring and we said we are going to be an electronic exchange, which was the first in the world at that point in time, completely out of the box. But more importantly, after going live, NSE set up NSDL, India's first depository. And what did we do? The physical share certificates, which used to be such a problem back in those days, we dematerialized them. In about 2 years' time, 95% of the share certificates got dematerialized. So what happened after this dematerialization wave was completed? It was so easy all of a sudden to buy and sell shares. So 3 things were missing. One was transparency. At that time, if you bought shares, you had to call the broker. This is before NSE went live. You had to call the broker. You wouldn't even know at what price the broker has bought the share or sold the share. He'll give you a contract note. You have to simply pay the money. So there was no transparency. Secondly, there was no efficiency. Like I said, the share certificate had to be sent to the transfer agency. It would take 3 months, and then it will come back as bad delivery. The signature did not match. And thirdly, there was no trust, because brokers would default, settlements would get delayed. Already the settlement cycle was T plus 15. What do we see today? After NSE went live, transparency, because everything is computerized. You know exactly that moment in seconds at which the trade was done, and you know the price. It's all there on the app. You can see it yourself. That's the price you bought it for. that's what you get. There is efficiency. We don't have T plus 15 settlement cycle anymore. We have T plus 1. We can even do T plus 0. We can even do instantaneous settlements. We've got the technology. And number 3, trust. Today, if you buy a share, does anybody go and check their account, whether these shares have come into the demat account? Nobody checks. If you sell a share, you know that the money will automatically come to your bank account. Nobody checks. That's the trust quotient that we have built up in 30 years. And now look at the world. The world today is such that in most countries, particularly the developed countries, the commodities market is many times bigger than the equities market. The market capitalization of all the companies listed on NSE is around $5 trillion. It keeps changing up and down a bit because of geopolitics and because of various factors that impact the valuation of companies. But you know what? India, like the Honorable Minister said, is a big consumer of gold, and the value of gold in Indian households at this time is estimated at $5 trillion, as big as the equities market. Just gold, okay? I'm not even talking about the other commodities. So why are we not able to financialize this commodity in particular and other commodities and take them to the next level? That's the challenge given to us right now, and that's what we are here to solve. There are many learned minds in this audience. There are many experienced people. I'm just saying aloud what I thought we should all be considering. I think together we need to see how we can dematerialize gold. That's really the ask of the moment. How do we dematerialize gold? There is a way to do it. There is a product called electronic gold receipts. Our regulators, SEBI, have already thought about it, and the government has also supported the launch of electronic gold receipts. Now, EGR is a product where a retail consumer can go and surrender gold to the vault manager, and the demat quantity will be credited to the demat account of the customer. And then he or she can sell that on the stock market, just like they can sell shares and other bonds and so on. This will encourage people to come out, surrender their gold, convert it, make it electronic or dematerialize it, in other words, and then start trading in it. What this will do is this will create a lot of buzz. Number one, it will bring out the gold from the households, and most importantly, it will start contributing to the government's exchequer. How? Because for every trade, there'll be a small commodity transaction tax that possibly can be levied. Why is this product not taking off? Because of a GST challenge. When the gold is surrendered, there is a 3% GST which is levied, and that is creating an obstacle in the progress of this product. If we can solve this, and we know how to solve this, we have a suggestion, we have a white paper, I think we will crack this. Imagine 25,000 tons of gold in Indian households, and they say that there's another 25,000 tons in the temples of India. And this is all completely non-financial, not helping anybody, not helping the country. So if we can unleash $10 trillion of wealth, make the stock markets count more. We have the platform, we have the capability, we have the technology, and on most days, most of us already know that NSE manages 2,000 crore order messages in 6 hours and 15 minutes. In fact, yesterday, we saw 2,100 order messages in 6 hours and 15 minutes. It was a record. We have the technology to deal with another 2,000 crore order messages for gold and other commodities. We are here to keenly contribute to what the country wants and take this to the next level. Thank you once again for this opportunity.
Well, friends, you've heard very distinguished speakers, Mr. Jindal, Mr. Sen, the views from ICRA and now from NSE. Honorable Minister would have liked to stay with us more, but he has to attend a Parliamentary Standing Committee meeting. But what he says is that this is a very interesting subject for him, and he would like to take down all the deliberations of today into a form of note that he can present to the Parliamentary Standing Committee on Finance. And ASSOCHAM can go and deliberate with the members of the Parliamentary Standing Committee. How can gold become from tijori to a national asset? That's what the message the Honorable Minister has given us. So, looking at his valuable time that he spent with us, I would like to, sir, on behalf of ASSOCHAM, thank you very much for your kind presence, listening to us, and we shall come back to you, sir. Thank you. Thank you. Let's give him a big round of applause, please. And we can have a group photograph quickly.
We thank our Chief Guest, Shri P.P. Chaudhary ji, for giving us his precious time. Thank you so much, sir, for your time and for gracing the occasion. Thank you. And we also thank Mr. Shri Ramakrishnan, Chief Business Development Officer, NSE Limited, for giving the address. Ladies and gentlemen, we request you to kindly settle down as we are proceeding further with another important address. And now, I request Mr. Shivanshu Mehta, Senior VP and Head, Bullion Multi-Commodity Exchange of India Limited, MCX, to kindly come forward and deliver the address. Ladies and gentlemen, please put your hands together for Mr. Shivanshu Mehta.
I firstly thank Shri P.P. Chaudhary, Honorable MP Lok Sabha and Chairperson, Joint Parliamentary Committee on One Nation, One Election, and member of various other committees for having spared so much time, focus, and attention in today's summit. I also welcome my eminent co-panelists, including the officiating members of ASSOCHAM, Shri Anil Agarwal ji, past president, Shri S.K. Jindal ji, my friend, philosopher, and guide, who is the chairperson of the National Council on Commodity Markets and Investments, and my very dear friend, Shri Suvankar Sen, who is the co-chairperson of the National Council on Capital and Commodity Markets, ASSOCHAM, and my other co-panelists on the dais, and members of the bullion and jewelry industry who are part of this August gathering. I welcome you all on behalf of MCX. MCX, as you know, your exchange has been built around the cornerstone of the bullion and jewelry industry over the past 2.5 decades. And I say this with a humble sense of pride that today MCX finds itself interwoven into the very fabric of the bullion and jewelry industry of India. But before I get into the role of an exchange and what we look forward to further contributing, I dare say that as we hold this conference, gold itself, which is the theme of this conference, is most interestingly poised globally with the events unfolding around us and the ensuing situation. Whatever phrase or name that has been associated with gold finds itself being interpreted in a different way with every passing day. You know, store of value, safe haven amid geopolitical, macroeconomic turmoil, safe haven and hedge against inflation, etc. And last but not the least, a quasi-currency itself. I dare say that this has its implications for investment as well as industry, because the volatility, when you talk about an asset class with a volatility of maybe more than 25% annualized, then it calls for efficient risk management by industry, and it also calls for organized and empowered investment tools for investors at large. And this is where the role of an exchange like MCX comes to the foray, to serve the industry with efficient and effective hedging instruments like futures, options, indices, investment tools like the bar and coin products that MCX has in its portfolio, which are built around enablement of an SIP type of facility based on the depth and liquidity which the order books carry, which enable efficient and efficacious investment. Of course, price discovery itself, when we see every nook and corner of the country, it just so happens that before spot segment really became organized, which we are all working towards doing, as Sriram himself was pointing out about the EGR. But even so, over the past 2 decades, whenever a pricing decision is to be made by the industry, it is largely made on the reference of MCX prices as MCX plus or minus. So price discovery. Quality assured delivery. Most of the products of bar or coin format, they all come with assay certificates. They come with a certain counterparty, risk guarantee because they're traded on the exchange. And they come in tamper-proof packing, especially the coins, enabling investment. Of course, spot to futures integration and recycling, as one of my friends from the ICRA said. So import dependence has to be continuously looked at in a serious way. And MCX, with the Atmanirbhar Bharat theme, had set up the good delivery norms which enable delivery of quality, good Indian domestic refiners in the same contracts in which the LBMA gold gets delivered with no difference in price. And it's, again, a small number, but it's important to share that over 16 tons of gold of Indian origin, Indian refined gold has been delivered via the MCX contracts ever since the introduction of the GD norms. So considering all of these small contributions which we reinforce that we continue to make to this industry, I'm happy to share that your exchange, MCX, is today the largest exchange in the world for commodity options and the largest exchange in the world for gold options as well, as per the Future Industries Association study and data for 2025, and a robust trading turnover in bullion, futures, and options we see every day is about $35 billion US. When we look at the future, we want to strive to enable this industry with even richer bouquet of products. And when I made a reference to spot, I also want to assure you that under the regulatory aegis of SEBI, the electronic gold receipts, which is the most promising product, we continue to work towards weeding out the initial problems of taxation that it faces. And once that is done, we look forward to an organized, streamlined asset in the hands of each investor under the exchange ecosystem and regulatory aegis of SEBI. and it can bring about tokenization, recycling. When we say 25,000 metric tons of gold resides in Indian households, it can further enable the recycling and the financialization of this asset class. Thank you so much for your patience.
Thank you so much, sir, for delivering the address. And now, ladies and gentlemen, it's time for a vote of thanks for the inaugural session of 16th Gold Economic Forum. I request Mr. S.C. Agarwal, Member Managing Committee ASSOCHAM and CMD SMC Group to kindly come forward and deliver the vote of thanks. Please put your hands together for Mr. S.C. Agarwal.
Good morning, everyone. Shri P.P. Chaudhary ji, Honorable MP Lok Sabha Chairperson, JPC on One Nation, One Election member in Committee on Finance, Estimates, Law and Justice, Home Affairs, etc. He has to leave early. Mr. S.K. Jindal, my friend, Chairman, National Council on Commodity Markets and Investment, ASSOCHAM. And other speakers, Mr. Anil K. Agarwal, past President, ASSOCHAM, Mr. Jatin Kakkar, Mr. Sri Ram Krishnan, Mr. Shivanshu Mehta. Good morning, everyone, ladies and gentlemen. You see, first of all, I would like to congratulate ASSOCHAM for organizing this 16th Gold Economic Forum, integrating the bullion market into the $5 trillion Indian economy and global financial order. Since morning, we are listening inaugural session and started by Mr. Anil Agarwal ji and subsequently good theme address by Mr. S.K. Jindal, comparatively lengthy and explaining everything of gold, plus, minus, financialization and everything. And subsequent speakers also told about the gold, and Mr. Sri Ram Krishnan talked about our GDP, which was 400 billion in 1995, and today it is 4.2 trillion US dollar, 10 times in comparison to other countries, which is 2 to 5 times. And in the same way, India is to become Viksit Bharat by 2047. So I think in the way India is increasing their GDP, it should be around 30 trillion US dollar. And we are estimating that by 28, 29, we should be $5 trillion. As on we are $4.2 trillion. As we know that our gold stock is 35,000 ton in India, which is equivalent to 5 trillion US dollar. And 35,000 ton, out of that, it is estimated that 70% can be in the jewelry form. So basically, Mr. Sri Ram Krishnan has pointed out that how this gold to come in financialization. Because it is a dead investment. Though it is an investment, it will increase by the time it has. But you see, liquidity of the economy is no more if we don't financialize it. Great challenge. And India is a consumer of around 24% of the gold produced in the world. So, and 26% as on today, it is consumed by China. But we are not, we are price taker, not price setter. So that is also a challenge. And Mr. Sri Ram Krishnan has pointed out how to financialize this asset. It is a challenge. And he has suggested like demat of gold, electronic EDR, electronic dematerialized receipts. So very good step. I think government should consider it. And though currently if somebody has to invest in gold, he can buy gold ETF. and can also invest through gold funds also. Previously, government has take out a scheme of sovereign gold fund, but that is presently discontinued because gold has appreciated a lot and government loses in that. So, and moreover also, if you see the increase last 2 decades, gold has increased a lot, and if you see the history, so why gold has appreciated so much in last 2-3 years? Because when Ukraine and Russia war started, Russian money was lying in American banks, $300 billion US, and what America did, they threatened it, either you stop the war or we will seize your funds, and they seized it. So country has seen, if they can seize like this, so smart countries like India and other countries, their central bank start buying gold, and they put very good amount of reserves in the form of gold, and they sold their treasury bond. So when gold was very low price, they started accumulating it, and realizing this, the investor or so-called operators inflate the price, and generally people start investing in ETF, and gold ETF of every country roughly full their vaults, tijoris, you can say. And that is why shortage of gold and silver, and it has increased the price. But when war occurred between Iran and US and Israel, so people thought ki it's a safe haven asset, so they started buying, but the operators or ETF holders start selling it, so it didn't rise as expected. So this is one of the reason. As of now, gold is not increasing very much. It is stable or down. So I think financialization of gold is very necessary in the interest of country, and people who are investing in gold, physical gold, money stopped, liquidity stopped there, economic activity become reduced. So it is advisable that if you are buying for investment, you must invest through gold ETF, and it is always being traded in NSE, BSE, very liquid. Even in physical gold, if you sell it, first though, if in the jewelry form, making charges and other costs are there, but when you sell it, you have to go to the jewelers again, and there also you lose it. So ETF is a very good instrument. I think that is a better instrument. And moreover, Mr. Ashok Gautam is sitting. He is MD CEO of India International Bullion Exchange. So they are doing a very good job. They make gold import very economically, very easy for qualified jewelers. And those who are a qualified jewelers, they can buy gold and take the delivery without getting it imported. So, and due to the agreement of SEPA with Dubai and India, gold is coming easily in India at a 1% concession custom duty. So this exchange is doing a very good job. So I think role of other exchanges, MCX, NCDX, and other exchanges are also very good. They are providing day-to-day online service and telling you the rate of every commodity. Still, equity as worldwide, commodity is 5 to 10 times larger than the equity market. Here in India, it's just reverse. It is 1/10 of equity market. So our equity and commodity, our commodity market is yet to expand in a big way as other world markets are increasing. So I think Once again, I thanks to Mr. S.K. Jindal, Mr. Anil Agarwal, Mr. Swankar Sen, Sri P.P. Chaudhary ji, Mr. Jitan Maker, Sri Ramkrishnan ji, Mr. Shivanshu Mehta, who give their address, give their deliberations, share their views. Thank you very much for your excellent views, all of you. Also, I would like to extend my thanks to the participants, sponsors, media, and all others who are sitting here. It is a full day session, so lot of things about gold and challenges and uses and other options are yet to come. So thank you very much for giving me the chance. Once again, congratulations to ASSOCHAM. Thank you very much.
Thank you so much, sir, for delivering the vote of thanks. And ladies and gentlemen, with this, we conclude the inaugural session of 16th Gold Economic Forum, themed Gold's New Horizon, Integrating the Bullion Market into $5 trillion Indian economy and global financial order. I once again thank all our dignitaries and our esteemed speakers for delivering the addresses and setting the tone and the theme of the event. Thank you so much for contributing to the inaugural session and for sharing your inspiring words and brilliant ideas. And now, ladies and gentlemen, once again, I request you all to put your hands together for this wonderful inaugural session that we have just concluded. And I request everybody present here to kindly join us for tea and coffee. Let's have some great conversations and brilliant discussions and some networking over tea and coffee. Thank you so much. And once again, I thank all the dignitaries and esteemed speakers. Thank you.